In this video, we're gonna go over a credit put spread screener for Market Chameleon to find some trade opportunities, but most importantly to go over the filters so you can have trade ideas, so maybe you can find your own trades opportunities regarding high market cap stocks that you all know and love, like the Apple, Microsoft, Nvidia. Look at all those apples in here. I haven't even filtered anything. So before we get going, let's read a quick disclaimer and know that this is not a financial advice. I'm not a financial advisor. This is for entertainment, educational purposes only. And my name is Ziv, also known as Finance After 40. So let's get started with Market Chameleon put credit spread. Now, in order to get to this screen, you're gonna click here screener, and of course 7 days link in the description below if you're not a member just yet. Vertical spread, bull put spread right here. This is good. This is what you click, and this is the default setting. Now, if you watch my videos in the last couple of days, I went over all of them in details in each and every one of those filters. So today we're gonna go over any of those, couple of those, maybe one or two. Market Chameleon has basically some pre-default settings that we can pick. So let's, before we click on the first one, just so you know, if you are getting into the selling options for income and you trying to learn about put credit spread, know that this is my favorite strategy. Not even it's in my top 3. I think it's number 1. So just so you know, what is a put credit spread? You make income in 3 ways as long as the following conditions are met. You are bullish. You gotta understand, you have to have a bias for put credit spread. You are bullish on a stock. So I'm not going to say the stock name, but I'm going to give you an example how you can win in 3 ways. So let's say the stock price is $100, okay? You win 3 ways. Number 1, the stock goes up. The stock goes from 100 to 110. You win, okay? Because you wrote put credit spread. You are selling put credit spread that is out of the money. What do? You sell, for example, put 95 and you buy another put simultaneously, let's say the 90. So you sell 95 put and also buy 90 put. The stock price is at 100, and the 3 ways to make money is if the stock goes up to 105, 110, you collect the entire amount of income. Option number 2, the stock stays at 100. You collect 100% of the income because you sold 95 put and you bought the 90 put. So those are 2 ways. Third way is if the stock goes down to all the way to 95.01, you still collect 100% of the income because so you still have downside cushion. So those are the 3 ways, and this is why I like to sell put credit spread that are out of the money on stocks that I'm bullish on, basically, or ETF. So let's find some examples. So with that being said, now that you know how to generate income from put credit spread, you need to find an edge. That's why I go to Market Chameleon. And while you can play around with all those settings and find something for you, again, I've done 2 videos on those, if not 2, 3 or something. You can also go, and this is what we're doing, Market Chameleon presets. So let's try the first one, see what we got. Maybe we can do 2 or 3 in this video. Best by return if flat plus 10% edge. Let's click. What does it mean? So if the stock, remember the example that I gave you? So this filter, this pre-filter says best by return if flat. So let's say the stock is at $100, same thing. The stock stays $100 plus 10% edge. The edge, the higher the edge, okay, means that you are collecting more income than what you should have collected based on history. So this is actually a good, very good filter. And let's see what they found for us. So the expiration for this predetermined settings. Next 30 days expiration, very nice. Okay, so for the next 30 days, spread between the strikes. So you can play around this, but up to 5. That means that your most collateral that you're putting on a spread is $500 minus the income that you will collect. No changes in here. Any positive, if the stock is flat, you got any positive, okay, and cushion to break even at least 1%. No change in the delta. And you see here, this is what I like to see: earnings, no earnings after expiration or none. You can play with it, but that means that there's no, of course anything can happen, but basically we don't want any surprises. When we sell put credit spread, we want the stock to do nothing or go up or go down just a little bit. So that's good. Theoretical edge above 10%. That again, edge means the higher the edge, the more income you are generating based on the price that it should have been based on history. And here, best return if stock is flat. Return if stock is flat by symbol. Okay, this is good. This is actually, I like this. I like the edge, I like the win. So this says basically if the stock stays 100, this is what you got. So let's see, we got before like I think 150 pages. Now we are down to 6 pages only. And you see here the theoretical edge, 12%, 17%. Just for the example, it tells you, let's see the first example. Apple, okay. Price 219. Let's see what we got. Price 219. And you see here the trade itself, it says sell the 215 put, buy the 210 put. Okay, we are 219, so we are out of the money. That's good. And you are collecting $132 compared to theoretical value of 87. This is a good one. So you're collecting 132 compared to 87. This is your 12% edge, and this is your 81% win rate. Okay, it's actually pretty good. The delta is 25.36, and the expiration is September 27. There's an event, Apple event. Okay, so if there's an Apple event, I mean, it's up to you. But you see here, return if stock is flat. So 35%. So if the stock stays the same, 35% yield on your income. So if I do this for this specific example, for this specific filter, let's click twice and see and filter by return. You see here, return if stock is flat, 138. I'm looking for something that I know. Something that I know, so that's Intel and Nvidia. Let's see what we got for Intel. 19.6 is the price today. Okay, now I hope you understand why I moved here, because we are doing the filter best if return by flat. So if return by flat, I'm not gonna play around. I know that the edge is all over 10%. I'm looking for something here that's also good, and win rate. Okay, so all win rate is positive, but let's see something. Let's see. I don't know. I'm filtering this with you. Feel free to comment below the trade ideas that you have found. So let's say Intel 19.6, and it tells you sell the 19.5 and buy the 19. This is for small account trade, basically, that you're risking $50. $50, that's all, minus your income. Your income is $20. So theoretically, you're risking 30 to make 20. Interesting. You're supposed to collect $15, but you're collecting 20 based on history. This is your edge, 16%. You got 69.7% win rate. And the expiration is September 20. There's an event, City Global Technology Conference. Okay, but you got yourself, look at this, 66.7% return on your money if Intel doesn't move. So if Intel doesn't move by expiration, and I mean they went down after earnings from $30 to 20, but if they don't move You collect based if the stock is flat, it's 66% on your income. Let's see NVIDIA price 108.5. Let's see what we got here. You collect $160 compared to $132. This is your edge, 11%, 65% win rate. And the trade itself is you sell the 108, you buy the 104 for next month, October 4th, Goldman Sachs event. Okay, not a big deal. And we got a 2% downside cushion, and your max, if NVIDIA stays at 108, you make, and above, you make basically 66% on your money. So for here, let's see what you're getting. You're risking 240 to make 160, but in reality, you should have just collected 130. So this is the edge. That's actually not a bad trade, assuming that NVIDIA is down, is done with going down, basically, and they're gonna stop the bleeding at 108 and go up, basically. And you can go, let's see if we're looking for something. This is interesting, Dell. So Dell, why is it interesting to me? Because I saw 25.7% edge and 79% win rate. So again, you don't have to go by this or this or this. And again, I'm not touching this one, 138% win rate, because I don't know I think this is like a VIX ETF or something, UVXI. What is this? ProShare, Ultra VIX, Short. I'm not touching that. I'm touching stuff that I know. So Dell, let's see what we got for Dell. Price 109.51. And it tells you the trade ideas, if you're bullish on Dell, to sell the 109 put and buy the 106 put, okay? And the 25% edge means that you are collecting upfront $116, but in reality you should have just collected $69. You got almost 80% chance of a win rate for September 20, 63% return on your money if the stock doesn't go anywhere, and your max loss is 180, 184, collect 116, basically, compared to $70, which is like 40% more. This is your edge. So and your max profit. So let's go back to the three ways that you can make profit. If Dell goes up to 110, 112, 115, doesn't matter, you collect the entire income. If Dell stays the same at 109.5, you collect the entire income because it's still above 109. And the third way, if they go down to 109.01, you still collect the entire income, because you are sold the 109, 106. So this is another thing to consider. It's up to you. Tons of stuff to go over and see what you see. In the next couple of videos, we're gonna go over all of those, because those are very interesting to me. I don't know about all of them, but we're gonna go over at least the first three, and you're gonna go by that and see what we see. If this was valuable, I'll see you on the next one. Market Chameleon 7 days trial, link in the description. Bye bye.